Disaster for America, the crypto clash, China's digital push, and the quiet collapse of financial power. The headline that shouldn't exist. Something extraordinary just happened. Not in a backroom meeting, not in a leaked document, not in a classified briefing, but on live television. A major US financial news network ran a banner that read, "Disaster for America." Not about war, not about terrorism, not about a natural catastrophe, but about crypto. Bitcoin falling, Ethereum slipping, XRP flashing red, and underneath it all, a warning that China's digital asset push may be igniting something far bigger than a market correction. Let that sink in. For years, crypto was dismissed as a joke, a scam, a casino, a sideshow. Now suddenly, it's framed as a national threat, not because prices are down, but because control is slipping. Because while Americans argue about whether Bitcoin is real money, China is quietly building an entirely new financial system, one that doesn't need the US dollar, Western banks, or Wall Street approval. And here's the most important part. This isn't about crypto winning or losing. This is about power. Who controls money? Who controls settlement? Who decides who can participate in the global economy? And whether America is about to wake up and realize it no longer sits at the center of the financial universe. Tonight, we're going to unpack what that Fox Business segment really meant, why markets are shaking, why crypto prices falling may be the least important part of this story, and why the real disaster may not be crypto crashing, but America falling behind. This is not hype. This is not financial advice. This is a reality check. The crash they want you to see. Let's start with what everyone is being shown. Red numbers. Bitcoin down. Ethereum down. XRP down. Television loves this. Red arrows trigger fear. Fear triggers clicks. Clicks trigger compliance. But here's the first truth most viewers never hear. Price moves are not the story. They are the distraction. Bitcoin dropping a few $100s at 70,000 plus levels is noise. Ethereum sliding a few percent is volatility, not collapse. Yet the language being used is extreme. Crypto clash. Disaster for America. Ignites. Why? Because the price movement isn't the threat. The architecture change is. Markets always fluctuate. What terrifies institutions is when the rules change underneath them. Crypto markets can go down 30% and recover. The dollar losing structural relevance does not recover. And that's what this segment was actually about. Not investors losing money today, but America losing leverage tomorrow. Because for decades, the US dollar has been more than currency. It has been a weapon, a gatekeeper, a toll booth for global trade. If you want to trade oil, dollar. Settle commodities, dollar. Move large sums internationally, dollar, or a US-controlled clearing system. Crypto threatens none of this directly, but China's strategy does. And crypto, whether Washington likes it or not, is part of that shift. Why China isn't banning crypto? It's replacing the system. Western media loves to say, China banned crypto. That's misleading at best, and dishonest at worst. China didn't ban digital finance. It banned uncontrolled digital finance. While retail speculation was restricted, something far more important was happening quietly. Digital settlement rails, state-backed blockchain infrastructure, tokenized trade instruments, centralized digital currency integration. China wasn't trying to stop the future. It was engineering it. And unlike the US, China didn't leave this to venture capital chaos and regulatory confusion. They made it strategic. Their goal isn't number go-up tokens. Their goal is sovereignty, a system where trade can happen. Without SWIFT, without correspondent banks, without dollar clearing, without US oversight. And here's the uncomfortable truth. They're years ahead. Not in marketing, not in memes, in deployment, ports, energy contracts, cross-border settlements. These aren't experiments anymore. They're being used. And every time one of those transactions happens outside the dollar system, something subtle but irreversible occurs. Demand for dollars shrinks, not crashes, shrinks. And shrinking demand is how reserve currencies die, slowly, then suddenly. Why the US still doesn't understand the threat. Here's the tragic irony. America created the conditions that made crypto necessary. Endless debt, weaponized sanctions, frozen accounts. Payment censorship. When you tell the world, use our system or else, eventually the world says, fine, we won't use it. Instead of leading innovation, the US response has been confusion, regulation by enforcement. Political infighting. Institutional capture. Banks don't fear crypto because it's risky. They fear it because it works without them. Governments don't fear volatility. They fear irreversibility. Once trade routes move off dollar rails, they don't come back. Once alternatives mature, they don't politely wait for Washington approval. And here's the problem. The US still treats crypto like a consumer product. China treats digital finance like infrastructure. One builds apps, the other builds railroads. Guess who wins long term? Why falling crypto prices may actually be a signal. Now here's where things get interesting. Crypto falling during moments of geopolitical tension isn't a sign of weakness. It's often a positioning phase. Institutions don't buy breakouts on TV. They buy uncertainty in silence. Retail panics, smart money rebalances. And historically, when crypto prices compress while global tensions rise, it means one thing. The system is deciding where value should live next. Gold doesn't spike immediately. Crypto doesn't moon immediately. They stabilize, they wait. And when confidence in paper promises cracks, that's when repricing happens. The danger isn't today's red candles. The danger is tomorrow's repricing of trust. The real disaster for America. No one is saying. Let's say the quiet part out loud. The disaster isn't Bitcoin crashing. The disaster would be losing control of settlement, losing control of liquidity, losing control of sanctions, losing control of trade enforcement. Because once money moves without permission, power follows, and power never comes back peacefully. If the dollar becomes optional rather than necessary, America's entire economic posture changes. Debt becomes harder to finance. Deficits become more dangerous. Interest rates become more sensitive. This isn't ideology, it's math. And that's why media suddenly sounds nervous. Not because crypto is dangerous, but because irrelevance is. What this means for you, not financial advice. So where does this leave the average person? Confused, overstimulated, pulled between fear and hype. Here's the grounded reality. You don't need to pick sides. You need to understand transitions. Every major financial shift in history punished people who trusted permanence. Nothing stays dominant forever. Not empires, not currencies, not systems. The smart response isn't panic, it's awareness. Understanding that diversification isn't just about assets, it's about systems, centralized versus decentralized, permissioned versus permissionless, political versus mathematical trust. You don't have to bet your future on any single outcome, but ignoring change has never protected anyone. This was a warning, not a story. That Fox Business headline wasn't journalism. It was a tell, a signal that something fundamental is shifting. And those who benefited most from the old system feel it slipping. When media starts calling technological change a national disaster, it's not because the technology failed, it's because control is changing hands. Crypto didn't create this moment. It revealed it. China didn't break the system. They adapted to it faster, and America isn't doomed. But denial is far more dangerous than competition. The real question isn't whether crypto survives. The real question is whether legacy power structures can adapt without trying to crush what they don't control. History suggests they rarely do, and that's why this moment matters, not as an investment story, but as a civilizational pivot. Stay awake, stay aware. This is Felix. See you next time.